Hello traders! We are back to the trading room. I must admit I'm very sad to be back because we always have a ball with graduates in Graduate Boot Camp where I introduce latest strategies. So here's a couple of emails I received from our members from Bulletproof Boot Camp. Bulletproof method taught in boot camp is one of the most explosive, highest probability trade method on the record, hands down. Setup extremely easy. Brand new scanner and new software, potential unlimited. Thank you, Brad. Lee? My dearest friend for life, long-term student. Dedication to student is breath of fresh air, in which has become an educational minefield in the area of trading advisors. Lee had done multiple boot camps, advanced his trading IQ, improved patience, and made me more selective trader. Bulletproof Boot Camp was by far the most rewarding. Consolidated previous teachings into concise, innovative trading techniques. Market approach should yield spectacular results regardless of the underlying time frame. In addition, new scanners for BP and CT platforms and evaluation of hundreds of charts within seconds, giving you seamlessly identification of potentially profitable trades. And that means the world. And for that reason, I'm very sad to be back. But if you would like to start in the course, you may be invited to Graduate Boot Camp, which had been recorded and available to graduates by invitation only. This is S&P since we came back. S&P reminded you, never short near institutional support. The previous 2 days flawless institutional rally from exact same place where market rallied from time and time again since the month of March. But take a look on this morning when markets are brutal. This is everything in your trading, traders. How you make trading decisions on day like this versus day like this is everything. This is institutional rally. This is brutal pain. Let's convert this chart to 1 so you can see what price had been doing. Look at this dance. Absolutely brutal. Nothing in common between 2 days. How are you dealing with days like this is everything in your trading. How you separate phenomenal institutional rallies of May 6th versus corrective junky markets is everything. This is when you stop losing money. If you understand that this is everything in your trading. Fibonacci resistance and Fibonacci support keeps trader out of trouble, not the place to short. It's institutional support, where market been rallying since the month of March from, where market rallying right now again and again and again. What is the problem remains? This resistance, not the place to enter into, is a problem. Here comes stunning long on S&P. Let me bring up the chart. Knowledgeable trader just placed long. And this is where it's very crucial. When market moving extremely fast, how knowledgeable trader responds to taking the profits off the table at this very important level. Correct? How sharply market just moved just right now also reminded you If you understand where institutional support is, you never short near. If you understand how crucial these levels are, you never pull a trigger randomly. You are on standby and you are monitoring carefully. Correct? Everyone with me? Time and time again, how you manage different market conditions, how you place your trades, is everything in your trading. Win uses months in advance, not the place to short. Bias firmly bullish since the month of March. To the upside, S&P right now taking a massive pause. There is no surprise. Every single trade this morning, this level had been crucial, confirming bullish weakness. If S&P continue respecting this level, buyers remain extremely weak. If bullish rally goes on and buyers picking up this steam, it means bullish rally becoming more and more interesting. But very sharp market moves like this reminding you, when institutional bias remains bullish, when institutional support is present, never short near. It is that simple. This morning, unlike yesterday morning, buyers are weak, market in pain. Every single tick matters. In brutal market conditions, market order is especially not an option. When market goes from completely comatose to very panicky market conditions, every single tick matters. Never confuse investing with trading, ever. Know how to place a trade. In day trading, stop bracket orders 95%. If God forbid you're trading without stop bracket orders, with random market orders, success is not possible. Market orders possible in investment decisions. In day trading, you operate as a sniper. With sniper's mentality, with sniper's execution. And most importantly, you never ever ever disrespect what institutions do. Too bad so sad this morning. Buyers are weak. Very critical moment on S&P. Knowledgeable trader knows. This moment will determine market for hours to come. Doesn't matter if you trade 1 minute, doesn't matter if you trade tick charts. Doesn't matter what time frame you trade. Identical accuracy remains. Nothing else is possible. Agree? That's it? We stayed out through so much junk. We stayed out through so much noise. Boom, key target is reached. Stop outside of break even. It's a beautiful thing when you play by the rules. It's a beautiful thing if you can manage phenomenal bullish rallies and horrific comatose market conditions. If you know and understand what institutions do, and if you trade with institutions, you are in excellent shape. And that's what you learn in the course. Choice is yours, what you decide to trade. Nothing else matters, ever. Only this. This is critical trend target. Trailing outside of break-even right now is everything. This is where price will start staging phenomenal pullbacks, because outside of decision point 2 in reversal zone, very, very important to trail very, very carefully. And if once again institutions will remind you that this is institutional support, not the place to short, you are in excellent shape as a trader. You're dealing pretty well with spectacular market conditions versus horrific ones. So if you manage to pull a couple of points on S&P in this brutal Tuesday, you are a brilliant trader. You absolutely expect phenomenal bearish pullback in this area, because that's the reason I named this level reversal zone. Not the place to enter into, the place to exit your trade. It is that simple. 2 points on S&P, 1 lot, $100. 10 lots, $1,000. 20 lots, $2,000. You don't need many trades. What you do need is quality in your trading. Doesn't matter if it's a morning with phenomenal bullish rally versus brutal corrective dance. When crucial day trading resistance remains, never forget that. That's been the range for the last 2 hours. Since the Mars of March, institutional support respected, not the place to short near. And the last few hours, price reminding you, this level is crucial to the upside. Never ever ignore, no matter what chart you trade. If I convert this chart to 5, identical formula will remain. This is a dance this morning. And this is your trade. What you need is quality. What you need is knowledge. And if you understand and trade with institutions, you are always in excellent shape. As long as you obey the rules and never break the rules taught in the course. This is the obstacle that remains. 28.94.75. There is no surprise. Not the place to enter, the place to exit your trade. And that's been the dance on S&P this morning. And that exact same accuracy applies no matter what you trade. Choice is yours. Is it S&P? Is it gold? Is it pound or is it apple? When price comes to reversal zone, not the place to enter, the place to exit. The place to adjust your trail very, very closely. Agree? And that's a dance. Nothing else needed ever. Pure price for entry and Fibonacci for exits. Your maximum work day 1 hour. And on brutal morning like this, you still do extremely well. As long as you remember to be on defense. Nothing else is possible. Only this. To the tick. Even on brutal Tuesday. When market in correction for hours. Rules are met, take a trade. Rules are not met. Do not touch the market. That's all you have to do, no matter what you trade. Shock or not, there is a reason I named this Fibonacci level reversal zone. It shows you very, very clearly where to exit your trade. Did we know or did we know that 28.94.75 will be a problem? Of course. Our favorite chart showing us that. Our crucial Fibonacci reversal zone on your trade telling you exit, do not enter long. And this Fibonacci resistance present in front of you since yesterday morning remains a problem. Yesterday's stunning bullish rally. Very different case today. This is your range for the last 2 hours. Nothing else is possible. And to the tick, this trade reminded you that. And that's the power of the method. Choice is yours. What do you decide to trade? So if you want to join us, please review the information on the website. At this point, private mentoring waiting list only. Please do not sign up for private mentoring without speaking with me first. If you would like to sign up for the group course, you can easily sign up online. Private mentoring, please speak with me first so I can get you on waiting list. 6 months course includes all group classes. And this is how you become qualified to join us in Graduate Boot Camp. So, group course, all classes recorded. Private mentoring includes all group classes, all recordings and modules. So, if you want to trade with top Wall Street executives who are trading the method, I look forward to working with you. Quality traders only, please. If you still want to chase indicators and speculative trades, pretty please, don't bother. No interest. Only to quality traders apply. Thank you.